Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Yvonne Man with Stephen Engle.
Our top stories: bonds hold their losses while stocks struggle in Asia as investors weigh a slower pace of Fed rate cuts. Traders also eyeing a raft of Chinese earnings and a trading debut here in Hong Kong. Also, a Bloomberg scoop: ARM cancels a Qualcomm chip design license, escalating a dispute over crucial smartphone technology. Plus, you don't want to miss this, our exclusive with Bank of America CEO Brian Moynihan urging the Fed to not go too hard on rate cuts.
What Brian Moynihan told our colleague Heidi Strout-Watson, Sydney, was certainly one thing that seems to be echoing, that, the Fed is still a bit too cautious, or maybe is cautious about cutting rates further from here. That's why you're continuing to see Treasuries hold those losses after what was that global sell-off on Monday. So we're talking about a 4.2% handle for your U.S. 10-year yield. We haven't seen that since July, really, and you're seeing that across Asia sovereign bond markets. The 40-year yield on the JGB is at a 2008 high right now, if we can flash that right now to your viewers. So at what point does this roil the equity market? We're seeing a little bit of wobbles here. U.S. futures are a little bit in the negative territory here, but then again, there was some bad news when it came to Starbucks pulling its guidance. You also have the likes of McDonald's with that E. coli outbreak in the U.S. So that's why we're seeing things a little bit heavy when it comes to stocks this morning. The dollar, though, is still bid up. Take a look at the euro. We're at August lows for the euro dollar here right now, 151, 152 levels for dollar yen. So continue to see that U.S. exceptionalism theme play out when it comes to the dollar, at least for now. Gold is holding on after we hit a fresh record, so we're watching that 27.60 sort of level for gold futures here this morning. Brent also, we did see a little bit of a rise up in oil prices overnight, but we've stabilized a bit right now. But stocks are bid up for the most part, but very marginal here this morning. It has been pretty quiet. It's mostly been the action in this bond market. You take a look at how bond volatility has been. The MOVE index has been the highest we've seen this year. Again, it's more about the Fed repricing, right? The fact that, these Fed officials are signaling that they may not be as aggressive in cutting rates. You add that to this whole prospect of maybe some sort of Republican sweep that seems to be growing in this narrative here right now, that if Trump wins, that we could be seeing yields ticking up higher, more fiscal deficits and the like. And then the Citi Surprise Index has also been rising to the highest we've seen since April. So it does suggest that maybe there is still room for higher yields ahead. You take a look at how China is. It's been quiet in China overall, but we talk about some big earnings coming up in China when it comes to Hong Kong Exchange. The like, we'll get to a preview coming up as well, some trading debuts that we have to watch as well. We're still waiting, by the way, that Tokyo Metro IPO. Still haven't seen a price yet so far. Futures are pointing slightly to the positive side here this morning, and we have dollar China hovering around that 7.14 level as well. You take a look at what to watch. Are we likely to see a fourth day of gains in the CSI 300? Although things have kind of, I guess you could say, momentum has slowed down a bit of late here. We talk about that China Resources Beverage listing, which is a good key rival to, of course, the likes of Nongfu Spring. So we have Bloomberg Intelligence's Ada Lee coming through to tell us a bit more about the prospects of this company. CGV sales coming up as well. We have Macau visitor arrivals in terms of data coming up. And of course, that BRICS Summit, Steve, is underway.
I thought this was supposed to be a slow day, Yvonne. It's shaping up
we
to
always
be
have to find something to talk about, right?
We're also looking, of course, at plenty of earnings coming out of Greater China today. Among them, Hong Kong Exchanges and Clearing. That's going to be an interesting one, of course. We're expecting a pop up in earnings. Also, China Coal Energy, CGN Power, Hans Laser Technology, Sinopec Shanghai, Top Sports International, Goa Tech Incorporated on the A-share markets. But we'll be really looking at, of course, those Hong Kong IPOs with China Resources Beverages, Horizon Robotics later this week. Of course, these are not as large as Medea, Yvonne, but again, we're seeing a pop-up. Now more than $7 billion raised in the Hong Kong IPO market this year, more than last year, but nowhere near that 2020, $51 billion that was raised. Yeah.
So seeing maybe some signs of life, though, that's coming through. We'll bring you the latest once that gong ceremony is underway. In the meantime, let's bring you Alain Bokobza. He's head of the global asset allocation team at Societe Generale. Alain, it's great to have you here in the region. We got to start off with this bond sell-off that seems to be gaining a bit of traction, although slowing down of late. I'm just wondering, where are we right now? What do you think is driving this bond sell-off mostly?
So I think the broad Federal Reserve policy is clear, that they are on their way to the neutral rate, so let's say 3% over time. So they are on the cutting sides to cut or not to cut. We are not anymore in higher for longer, so we have switched gear, we have switched chapter. And then it is the speed at which they do. And a month ago, we had some front loading of the rate cuts, which were very bearish the US dollar and quite bullish at the long end of the fixed income curve. And with the strong NFPs, the retail sales, then you go back to some kind of linear fall, and the repricing of the shape at which the Federal Reserve is going to curve impacts the long end of the curve and the dollar. So that is going to remain volatile. Imagine if on the next month or the month after next, you have a weak NFP, immediately the market will reprice for front-loading capability of the Fed in terms of rate cuts. So here is market volatility. I do not think the Fed is going to forget one of the FOMCs. So they are still on the cut. If they did 50 basis points in the last FOMC, it would be bizarre, I would think, not to cut. Obviously, 25 no more. But it would be very bizarre for the Fed to do big in once and to stop in the other one. So I think the speed is what we are talking about. For now, it's more a linear cut, something relatively slow, but regularly. And the bond market is repricing, and the USD have been repriced accordingly.
Is the equity market going to be repricing? We've seen now 2 straight consecutive days of the S&P 500 down, albeit minimally overnight. But we hadn't seen back-to-back losses on the S&P 500 in more than 30 sessions. So is this the beginning maybe of a pullback from a overbought market?
Definitely, we have been living a Goldilocks on everything. And that Goldilocks is behavioral finance, and it is dangerous to continue to be in a Goldilocks type scenario. So yes, I would rebroaden. So it's the to be away from an overweight US equities at the global level would be dangerous, but to broaden away from the high-powered stocks, the big 7, should make the portfolio, when you invest, somewhat safer with a lower volatility content. So the kind of S&P cap-weighted, the equal weighted would be much safer in the current environment, and it is doing reasonably well.
Hold on that thought, Alain. We have some breaking news now. Tokyo Metro finally coming online here this morning. It took about more than an hour to finally make this debut, given just the glut of buy orders that we were seeing in early trading. Here you go. We're seeing a huge pop of 37% to the upside for Tokyo Metro, where this is the biggest IPO we've seen in Japan of this year, and in 6 years, I should say, since we saw SoftBank, really,
Roughly $2.5 billion?
Yep, roughly that. And then you take a look at what's really driving that, the demand side of things. It's the high dividend yields. It's the stable earnings. That's what's making this stock in particular more attractive, according to the investors and analysts that we talked to. So we'll continue to watch that space as well. I want to bring it back to Alain, what we were just talking about, this competition between bonds and stocks. At what point is it going to start work? I mean, you mentioned about big tech still being something could be a big pillar in global portfolios and like. But at what point does this volatility in the bond market really start to affect stocks?
Oh, and I think you would need a very significant rise in bond yields to start affecting the equity market, everything being equal. I do not read this. The U.S. economy remains robust, but has been moving away from overheat we had a few quarters ago. The inflation prints are nowhere close to where they were at the peak. And in a scenario in which the oil price remains fragile, so that means gradually trending down, that means this will help the Fed, this will help the print of CPIs in the next quarter or so. So you would need a very significant rise in bond yields we do not have in our scenario.
Alain, let's bring it to this part of the world. Obviously, we've seen the yen when the Fed began the pivot to an easing stance. The yen went to 143 or thereabouts to the U.S. dollar. It's now back at 151 as those bets start pairing back that the Fed will not be as aggressive in cutting. I believe in September you raised your yen exposure 8 points to 20%, but you also reduced your Japanese equities to zero. Have you recalculated now? Things have changed dramatically with the yen and the carry trade. It's not there. Unwinding is not there. So what's your position now?
So let's share a fact. Carry trade unwind, which is the lending of the yen by Japanese banks to international investors, has not yet started. On the balance of payment, the capital part of the balance of payment data at the end of August, the carry trade has increased. This is what we are watching when the yen is back 140, 150 and above at the moment. So you had backtrack on two features. One is the speed at which the Fed is going to cut, back from front-loading to more linear. This is the previous theme. And secondly, you have the snap election coming at the end of the month, where the very top priority is not to formalize the end of the Abenomics and to the end of very loose monetary policy. Mm-hmm. This has been delayed for after the election. Okay. Yeah, with the new prime minister, you have not one but two events. So it's not irrational to look back at the formation of speculative attack against the yen until both sides come in. So I would do my shopping, being longer the yen, in the current phase where you have a formal attack against the yen, because the two formal pillars of a bullish yen are in place in the next quarter.
So 151 is a good buying opportunity.
It is a time when the long-term investors should find an opportunity, so to make the shopping, to invest and reallocate assets. Normally, you are contrarian. That is the best opportunity, and then you build on the best of the expected return. So yes, beyond 150, we would use that in order to reload on the yen on one side. On the equity market, what we have is yen volatility. Yeah, back to the repricing of the Fed. Again, if you were to have a bad NFP next month, immediately the market will price front-loading capability of the Fed, and the USD will fall. Agree on the so that is pure volatility, and the volatility of the yen dollar translates into the volatility of the equity market. And from an asset allocation basis, a more volatile asset makes it a reduction because the expected return might remain the same, but the risk you take, the vol quantity you take to get access to the expected return is lower. So that is the reason why we have downgraded the equity market weight in Japan. We're not negative on the equity market, but it will be more volatile.
I want to hear more shopping tips, Alain. For one thing, if we look at what 2025 is going to shape up to me, where do you think I'm going to find the best returns? Because if I looked at this year, it's been stocks, it's been gold, it's been Bitcoin, maybe not so much bonds. But where do you think is going to be the best area for returns?
I would go into credit.
Okay.
Credit, so we're talking corporate bonds. And the governance of corporates is incredibly good. When you are watching sovereign countries, they are spending and spending. In the US election, it is like a beauty contest. Which of the two candidates is going to spend more to please the electorate? Okay, so when you are watching most of the larger corporates, they are particularly shy on using their balance sheet, except for new investment, R&D, and innovation. And you have the what we call the rating drift, so the evolution of the credit rating on average for quoted corporation in Europe, in the US, in part of Asia, the rating drift is going up in a slowing economy. So yes, we have a quite strong exposure within the corporate to the corporate bond. You may imagine that based on the fiscal spending, which will continue unabated, whoever wins, she or he, in the US election, that is inflationary. Including the protectionist measures. And gold will continue to rise in this environment where it looks like based on geopolitics and based on inflationary pressure for the longer term. So we continue to have very strong exposure to gold, even at these levels.
As a safe haven, and also, as you mentioned, Global South is, the central banks in the Global South are buying up a lot of the gold right now. And that's a very geopolitical story with the BRICS summit going on in Russia right now. Alain, thanks so much for joining us. Let's come back soon and bring your shopping list, a revised shopping list coming ahead. Alain Bokobza, head of global asset allocation at Societe Generale. Well, still ahead, Bank of America CEO Brian Moynihan explains why he thinks the Fed can't go too hard with rate cuts. That exclusive interview coming right up. And welcome back to the China Show. Bank of America CEO Brian Moynihan is calling on the Fed to not go too hard on rate cuts. He was speaking exclusively with Bloomberg during his first visit to Australia, where the bank is marking 60 years of business.
We not only have all the general economic work, we have the top research team in the business. They do a great job, Candace Browning-Platt leading them and all the colleagues around the world. But we also have 60 million American consumers. And so when you think about the U.S. economy, you have great insight into what's going on. If you look at that consumer spending this year, the month of October so far versus last year, or third quarter versus last year's third quarter, it's up in the 4 to 5% range, which is consistent with a low inflation, low growth economy. That's across about $1.25 trillion to $1.5 trillion spent in a quarter. So it's a big sample, and the people moving around, they spend it each quarter on all different things, but it's generally growing consistent where we were pre-pandemic when you had Fed funds rate at the 2% level, 2.5% level. You had inflation in control, and you had growth in the 2% level. So that gives us confidence that our experts that do all analysis are backed up by the data we see in our clients, and that's what we see.
For the consumer, is there a degree of bifurcation there demographically?
It's less about bifurcation, because that assumes that there's sort of two. Look, inflation hits people in the lower income brackets more than it does others, but the good news is gas prices have come down. Food prices have tipped over. Inflation's in control. It's down in the 3% range, as opposed to it was running pretty hot. And so that helps. But if you have auto debt, and you want to get a new car, that debt is higher. If you have mortgage debt and you already had a mortgage loan, it's very low. And so it really depends on the consumer and really where they are. But the average American consumer has more money than they did before the pandemic, is in better credit quality before the pandemic, still has the money in accounts from some of this stimulus in the pandemic, and is spending money. And that's all good stuff for the U.S. economy, because we're such a consumer. That's the unique thing about it. It's a consumer-driven economy. It's a consumer-led economy.
Are you thinking about making allocations or allowances for stress at this point?
We always do that. So every quarter we run stress tests, thousands of them. Every day we run them in the markets, business stuff. We always look at it. And so what's the case if it turns out the wrong way? So even how we set our reserves, we have a modeled series of cases we put in. So it's not all base case. Base case is about half, and the rest are stress cases, and you add them all together. We're actually set our reserves as if unemployment was going to be at 5% at the end of next year, not what the market predicts at 4.3. So there's a conservatism built into that, and then we look beyond that.
There's also some potential complications for the Fed depending on what happens in just under 2 weeks' time, right? Does the fiscal scenario, particularly under another Trump administration, but also certainly there are risks when it comes to the Harris camp as well. Is that something that you're thinking about? So I would separate a very near-term question of the Fed getting the trajectory. Our experts have them cutting again a couple more times this year, so 100 basis points this year and another 100 basis points more evenly spread each quarter next year, and gets to 3 to 3.25 as a terminal rate. And then inflation comes down to the 2.3% as we move into 25 and 26. And so that is a well-engineered Fed change. And so the danger is that data, or they go too fast or too slow, and that risk is higher now than it was 6 months ago. And so as they move, everybody's going to watch them, and you see the selloff in treasuries one day and you see the rally the other day. Everybody's going to watch all that.
That was Bank of America CEO Brian Moynihan speaking exclusively with Bloomberg's Heidi Stroud-Watts. You take a look at how futures are shaping up here this morning, and looks like things are looking unchanged, pretty flat, pretty quiet here this morning, although we are still counting down to a big trading debut here in Hong Kong as well. China Resources Beverage Holdings will bring you the latest pricing once things open up, and of course that gong ceremony once things do shape up there as well. Meanwhile, we're taking a look at Tokyo Metro. That still seems to be the big one here, a big surge, and continue to extend those gains this morning in Tokyo. 714.37 for dollar China right now. We got plenty more ahead. This is Bloomberg. You're looking at live pictures now from the Hong Kong Stock Exchange, and there you go. China Resources Beverage making its debut on this Wednesday, and so far we are seeing a jump in the shares of 14% or so. We'll see how this all plays out throughout the day. If you're wondering who they are the owner of the Saban bottled water brand. So that gives you a little bit more context here. Price, in terms of the IPO, was about $14.50 a piece here right now, which was the top of the market range. Looks like we're seeing a bit more upside here this morning. But Steve, this comes on the backdrop of a very, very busy week of deals that we're seeing in Asia too.
Absolutely. $649 million listing, the biggest so far this year after Medea raised, $4 billion. So there's been a big pipeline, of course, that Bonnie Chan, the CEO of the Hong Kong Exchange, has been touting. And we have another one coming up, Horizon Robotics, as well later this week.
Yep, we'll bring you that once, of course, that does come through. But yeah, taking advantage of basically this rally that we've seen coming through in Hong Kong and mainland China to really kind of take advantage of the optimism around that as well. Obviously, we're talking about this company a little bit more with Bloomberg Intelligence. We'll bring you the latest. But yeah, this was an offering that was 234 times oversubscribed amid these strong orders from retail investors who were allocated about 40% of those shares as well.
That's right. Yvonne, our equity senior reporter Abhishek Vishnoi joins us now with a preview of today's market action in China. Abhishek, thanks for joining us. So China's smallest and most volatile stocks, they've been soaring. What's behind that?
Well, yeah, nobody significant owns them. It's not an institutional market, so nobody significant can sell them. It's largely a retail, local money-driven story. And it's got unique drivers. Beyond the stimulus, there is, this reiterated focus by Xi Jinping on tech development, importance of technology. And these are all largely early-stage companies. So the index of, these small startups, so as to say, has almost doubled from its close on September 23rd versus what we have seen, on the large cap side, a big rally entering into a technical bull market and then a bit of correction. But this, like I started by saying, that this is not owned by a significant number of important investors. So this, for me at least, is not China 2.0. China 2.0, run by stimulus, run by domestic consumption and a focus on technology, self-reliance, is still very much a large cap story. If you look at the top bets, both on investors as well as, on sell side's radar.
All right, Abhishek, thank you. Abhishek Vishnoi there joining us and talking a little bit more about some opportunities in the small cap space as well. Here is your pre-market session. Here, Hang Seng is up about 0.1%. But yes, we're waiting for that gong ceremony to play out on the Hong Kong Exchange for China Resources Beverage. This is Bloomberg. Welcome back. You're watching the China Show. We're counting down the open of markets. And of course, a big trading debut here in Hong Kong today. China Resources Beverage. That gong ceremony just underway here. You've seen the shares jump already in this debut. So we'll watch how this all plays out throughout the day. But certainly this is going to be a key sort of question on how this kind of heats up this competition in the water bottle space as well between the likes of CR Beverage, which owns Saban, by the way. And what does this mean for the likes of Nongfu Spring? Certainly, though, this comes on the backdrop of a very, very busy IPO season here that we've seen the last few weeks or so. I think 20 deals at least that we're watching very closely as well. So certainly a lot of prospects there. Of course, we're just about 20 seconds away from that gong ceremony underway. But yes, we were talking about how it was more than 200 times oversubscribed in this Hong Kong IPO. And a lot of it was retail driven. So certainly there is plenty of demand. But here we go.
Counting down in Mandarin there here in Hong Kong.
Yeah. There you go.
The Sabon water brand, pretty ubiquitous across China, along with Nongfushan and others. $649 million listing, the second biggest this year until tomorrow, I guess. Horizon Robotics probably going to just nip it at the bud there with a few more million, but we'll have to see how this performs today. China Resources Beverage.
Yep, so certainly looking pretty good so far in this debut, and we're watching very closely of what this all means for the IPO market. We're going to have Bloomberg Intelligence more on the outlook in just a bit. In the meantime, let's get you caught up with the market action here when it comes to onshore and offshore. And you're seeing slight declines that we're snapping out of 3 days of gains here when it comes to this Shanghai market. We're down about 0.4%. You're seeing when it comes to copper, some of these commodities are on offer this morning, just slightly though, but crude is following the futures in Shanghai to what we saw with Brent prices overnight as well. But some of these big caps like Huichao, CATL, seeing a bit of downside here today. Interesting note coming through from some of the, I forgot there was a call from Morgan Stanley when it came to some of these the property names as well, which we're looking very closely. Goldman, I should say, downgrading some of these developers like Chinawanka, saying the company has 1 to 2 key areas of vulnerabilities and less compelling risk-reward stock valuations after this rally that we've seen. So we're watching the property space very, very closely here this morning as well. Take a look at how Hong Kong is faring up. We're pretty much flat. HSTech is slightly higher here this morning. But we're watching, of course, what goes on, as Abhishek was mentioning, these small caps as well, which seem to be doing quite well in these volatile markets of late here. Meituan is seeing a little bit of upside, but no clear really direction when it comes to stocks here this morning. Things have quieted down quite a bit as well. In terms of earnings, Steve did mention what's coming up here. So Hong Kong exchanges, we're seeing slight upside here. Of course, a lot of talk about what the pipeline is going to look like here as well. Goer Tech, New Oriental Education, and China Coal all reporting later on today. We'll see if we get this pricing on CR Beverage, but we're still watching. Looks like things are still looking pretty good, though, Steve.
Yeah, interesting week, obviously, and we'll be talking about this one as well as, of course, the earnings from Hong Kong Exchange as it enjoys the increased liquidity that's coming into the market and on these IPOs, which are being priced supposedly at the top end of the range. Let's bring in Ada Lee, senior analyst at Bloomberg Intelligence, to talk about CR Beverage. What do we need to know about this particular company, or is this more a proxy for the appetite of the retail investor here who's kind of jumping back into the IPO game?
I think you made a very good point in terms of retail investors, because if you see how much is oversubscribed, I mean, that's over 200 times oversubscribed by the retail investor. That's really, really massive. And I think it reflects a lot of consumer and investor confidence into the market as well as into the consumer sector in China. CR Beverage is going to be one of the largest bottled water company listed on the stock exchange after Nongfu Spring. So I think when it's list or with its listing, it could also bring in more investor interest into the sector.
What does it mean for the competition then? As you mentioned, it puts it pretty much in line with Nongfu now. Are we likely to see more of a price war in the water bottle space?
Definitely. I think the ongoing price war is just going to heat up even more, bringing it maybe to a boiling point, excuse the pun. And I think with this is, if you look at the use of proceeds, they are looking to increase production capacity for self-owned facilities. Currently, there's only 1/3 of the production facility is self-owned. And when it bring all these new production capacity online, probably by 2025 towards 2026 as well, we will see more supply in the market. And when there's more supply, we will need to bring down prices for more market share. So definitely not very good for Nongfu Spring, and we do expect the price war to go on.
What about when it comes to the offer price? Do you think it's good value? How does it compare to its peers?
Well, the offer price is an interesting one, because when we look at it on a historical PE basis, it's just under 26 times, and it's trading around Nongfu Spring's valuation. And when you compare that to its global peers, its Japanese beverages peers, as well as Chinese beverage peers, it is also at the higher end of the range.
Okay, interesting. Ada, thank you. Ada Lee there, senior analyst at Bloomberg Intelligence. It looks like we've already evaporated some of the gains when it comes to what we saw when it comes to a CR Beverage here. We're trading pretty flat right now. We'll continue to watch this one as well. But yes, We're watching another IPO as well that's happening in Tokyo, right? We talked about Tokyo Metro. This is the biggest IPO we've seen in Japan in 6 years. You take a look at that, 45% upside there. It took a while for this to really kind of gain a bit of traction here, but certainly there you go. You're seeing a huge surge in those shares this morning today. All right, that brings us back to the whole IPO pipeline, what this looks like, and really let's hone in a little more on Hong Kong Exchange. Given the flurry of IPO activity that we've seen here in the city of late, Hong Kong Exchange is likely to record an increase in the third quarter profit today on stronger investment income. For more, let's bring in our Bloomberg Intelligence senior analyst Sharni Wong for more. So what do we expect from this report, Sharni?
Yeah, so Hong Kong Exchange, we're looking at about 7% growth in the third quarter. And of course, fourth quarter is going to be much stronger given the Asia market rally. But generally, even last quarter, prior to the Asia market rally, we saw a huge rebound in cash equities turnover, stock options, stock connect. So everything was great for them. Also, London Metals Exchange, which they own, volumes were very strong. On the investment income, I guess that's where, consensus and expectations, it does tend to differ because it's very volatile. But I think the Asia market rally in the very last week actually definitely helps them to offset the headwinds from Fed cuts.
So fourth quarter should be good, obviously. But what about going into next year for earnings?
So when we look at this year's earnings, unless ADT, which actually hit over 300 billion as of October so far, unless it drops back to about 180 billion, they're still going to beat expectations for this year. We actually have in our forecast for turnover velocity to normalise. But looking forward, the IPO pipeline is very solid. Even prior to the Asian market rally, we saw the media listings, so there could be more dual listings coming from China. We saw the upgrade of Alibaba, so there could be more secondary listings that get upgraded. And then, we've got US listings potentially coming back. So, with the elections and everything, I think it's great for Hong Kong Exchange.
All right. That is Bloomberg Intelligence senior analyst Sharni Wong. Thanks so much for joining us and updating us on Hong Kong Exchange. Plenty more ahead. It's a busy Wednesday. This is Bloomberg. Well, the Chinese and Indian leaders have praised closer ties with Russia in separate meetings with Vladimir Putin during the BRICS summit in Russia. Let's bring in our news desk editor, Jill Deesis, for the details. So there's indications as well, maybe we'll start there, that there's a bit of a thaw going on in the cold relations between India and China. What can you update us with?
That's right. So we're still actually waiting to see whether or not Xi Jinping and Modi meet in a bilateral summit on the sidelines of this BRICS summit in Russia. But at least the initial indications seem to suggest some kind of thawing there. China and India did resolve a years-old border dispute just heading into this meeting. Of course, it was in the summer of 2020 when there was a deadly skirmish along the border between between China and India in the Himalayas. That led to a lot of tensions between these two countries. You saw India in particular file these restrictions and boycotts and such against Chinese businesses. Now it does seem like maybe relations are improving there. We'll have to see whether that ultimately leads to a Xi-Modi meeting. But again, still to come. We still have a couple more days in this summit in Russia.
Yeah, and how do we look at the Russia-China relationship as well? It seems like, Putin did mention, China as a dear friend in describing it right now. How are we compared to what we heard from that no limits friendship maybe just about a year or so ago?
Yes, well, famously they did, declare this no limits friendship right before the outbreak of Russia's war in Ukraine. In the years since then, Xi and Putin have done quite a bit to continue to firm up ties. They've actually met several times this year, including most recently in Kazakhstan, ahead of Russia, but ahead of this meeting in Russia for BRICS. But yes, I mean, they're continuing continuing to talk. They're continuing to develop relationships there, obviously, much to the consternation of the U.S. and its allies in the West.
Well, exactly. So I think the real interesting dynamic here is Modi meeting with Putin. I think it's the second time in about 3 months that the two have met. How much does the warming, if you will, we all know there's a strategic relationship between India and Russia, but how much is this warming of interpersonal relationships between Modi and Putin undermine what Washington wants to do and use India essentially as a counterweight to China?
Yes, exactly. I mean, certainly that's a meeting that Washington is not going to probably be particularly happy with because, as you mentioned, Steve, I mean, India is certainly a country that, the U.S. has been trying to develop, stronger ties with, certainly wants, as you said, to provide that counterweight, particularly to China in Asia. But the fact that you've got Modi, again, having met with Putin now a couple of times within the last several months does indicate that obviously India wants to keep up that type of relationship. I mean, they do have an important trading relationship there that India hasn't really relinquished at all, in the years since the war in Ukraine broke out. But yeah, I mean, certainly something that I'd imagine the Biden administration in particular is keeping a really close watch on here.
Yep.
All right, Jill. Thank you. Jill is there, our Bloomberg News desk editor. Now to some other geopolitical stories that we're following for you today. The FBI is investigating the leak of classified documents that detailed Israeli preparations to retaliate against Iran. The two leaked documents emerged late last week on the Telegram messaging platform. Now, they showed Israel conducting covert drone activity and preparing weapons, and the incident also highlights how the U.S. routinely spies on its own allies. American intelligence agency says Russia and Iran may stoke violent protests inside the U.S. after the presidential election. A declassified assessment says that foreign actors may encourage or amplify physical threats of violence against election workers and politicians. The partially redacted document also claims Russian-backed agents would become more aggressive if Kamala Harris beats Donald Trump.
All right, well, ECB President Christine Lagarde says former U.S. President Donald Trump should visit to see how hard central banks work. That's after the Republican presidential candidate said the Fed chair had the easiest job in Washington. In an exclusive interview with Bloomberg, Lagarde also defended the importance of global trade.
I think fair trade is a key boost for growth, for employment, for innovation, for productivity. And I would say that it's something that we should not throw away, because in any period of time where this country, the United States, has thrived, were periods of trade, not periods of I'm going to retire behind my boundaries and play at home. No.
I mean, there was a big UK media outlet that called the U.S. economy the greatest economy on earth right now. I mean, would you agree with that? Where does it leave the rest of the world?
I think it depends where you are on the social ladder. I think you have to go further than look at the sort of aggregate numbers or the average numbers. It depends on where you are on that ladder. If you are at the bottom of the ladder, if you have small job, not much by way of income, I'm not sure that you think of, being in the first and best economy in the world. So everything needs to be considered. But it's a case that the US, for instance, has very high productivity, has a very vibrant tech sector, and has had it for a long time. So it has capitalized on it since the beginning of the 21st century, and that there is a lot of catch-up taking place at the moment. But I think you cannot look at that in isolation. You have to look also at the people. And I think if you look at the Gini coefficient, which is probably not the best way to measure inequality, the US is not doing so well from that perspective. So it's also a question of spreading and distribution so that all people can benefit. Sorry, I'm being political now. Forget it.
But do you worry about central banks being political or being dragged into the political sphere?
No, because I think there is a huge resistance to that in the decisions that we make, despite what is being suspected here or there in any place in the world. And I think for those central banks which have the privilege of independence, either by virtue of the treaties or the tradition, it's critically important to hang on to it and to defend it, because the credibility of an institution like a central bank really is a factor of how independent it is vis-a-vis the politics. And it's precious. It's very precious.
But do you think that you'll come under attack more? Not you personally, but just central banks. Donald Trump said, Jay Powell had the easiest job because it's a flip of a coin every month.
He should come and visit us. And I have thousands of hardworking people, economists, jurists, computer scientists, and I can assure you that they work super hard every day, not just once a month.
And that was the ECB President Christine Lagarde speaking exclusively with Francine Lacqua there in Washington. And we're now just, less than 2 weeks away, Steve, from this U.S. election. And we're getting some more reporting on some big names supporting Kamala Harris, the Democrat candidate. So from the New York Times, the last few days, we've learned a little bit more, right, that even Jamie Dimon would consider a role in the Harris administration. There's been a lot of talk about that, whether he would go into politics.
I mean, look, Jamie Dimon doesn't necessarily, from what I understand, want to come out and say that he is supporting Kamala Harris. There is probably some fear of maybe retribution if Trump gets in, even though he has vocally supported some of Donald Trump's policies. But he is a registered Democrat. And so the New York Times is saying that he is probably supporting that, and he would consider being Treasury Secretary if asked again. But others are coming out as well. Look, this has become politics and geopolitics have become, kind of a sounding board for big billionaires. We know Elon Musk for sure has picked sides.
Oh, yes, certainly on the Trump side. But Bill Gates, according to the New York Times as well, has been talking about, his donation, $50 million into the Harris presidential run. Now, he has stayed away from politics for many, many years. He's stayed in the sidelines. But what he told her, there was a statement to the Times, is that this election is different. So this really does show quite a bit of a change in terms of his political strategy. But he really wanted to keep under wraps, though, this donation, but it has come out. But yes, he hasn't publicly endorsed Ms. Harris. But yes, certainly a big shift there.
An interesting couple of weeks coming up. We also heard from Vice President Harris herself talking about how the Democratic Party is preparing for the possibility that former President Donald Trump declares victory before all the votes are counted.
I'm very much grounded in the present in terms of the task at hand, and we will deal with election night and the days after as they come, and we have the resources and the expertise and the focus on that as well.
And of course, terminal subscribers can get the latest on election polls, betting odds, and data for each swing state, as well as numbers on fundraising. That function is WSL Election Go, a pretty useful tool for the next few weeks. Plenty more ahead. This is Bloomberg. Hong Kong's second biggest IPO this year is doing this right now, continuing on with a pretty decent and pretty stellar, I could say, debut in Hong Kong. So we're up some 10% here right now. And hopefully, this helps and brings a little bit more of that IPO action back into the city, Steve.
Yeah, that's right. And we're waiting, of course, for Horizon Robotics tomorrow. It's a similar sized IPO. This one was $649 million. Horizon Robotics, $696 million. So this will be number 2 and number 3 so far this year after Medea, of course. Nowhere near the highs we saw in 2020 as far as IPO proceeds raised in the city, but much better, already surpassing last year's total. So Bonnie Chan coming through with her, she's the CEO, of course, of the Hong Kong Exchange, coming through with her pledge that the pipeline was pretty strong for these listings here.
Yeah, we're finally seeing it materialize after we were speaking with Bonnie for the last few months or so. So yeah, we talked about how oversubscribed this was, how retail investors really liking this stock quite a bit. this morning. You take a look at what we're in terms of analyst actions and what we're looking at here. There's been some interesting calls from the likes of Goldman Sachs. So downgrading some of these developers here. So China Wanka, that's cut to a sell by the bank with a price target of 650. They're saying the company, 1 to 2 key areas of vulnerabilities, less compelling risk-reward stock valuations after that recent rally. Sinopec A shares also reinstated outperform as CLSA. And Morgan Stanley also out talking a little bit more about these Chinese airlines. They may slide after they slash the price target. So for the nation's 3 largest airlines, they slashed it by about 19% on average. Why? They said expected net losses for the full year due to escalated industry competition. So we're watching that very closely this morning as well. Property stocks are something that we're watching as well. Let's see how they're doing this morning, given what we saw and what Goldman is saying here, that there is some risk of this rally kind of fading here. It doesn't seem like that's the case. You take a look at how the likes of Wanka, Sunac China, and Alrian all doing decently well here today, but nevertheless not as crazy as the last few weeks that we've seen when it comes to the property sector. And China Resources Power. So we're learning a little bit more about this placement plan. So the shares are slumping about 7%. So they're looking to raise about as much as $909 million through this share placement to investors and its parent as well. So it would, according to some analysts, create about a 4% dilution. And the news, as Daiwa says, it could be a short-term headwind.
Right, a short-term headwind there. That's why the stock is reacting in the short term right now, immediately down about 11% at one point.
Yep, take a look at when it comes to the rest of the markets here. It's pretty slow, have to say, beyond just this IPO story today. CSI 300 is slightly negative. Hang Seng is slightly into the positive territory here. HS Tech is catching a slight bid here, but volatility is not really doing too much either. But watching very closely what goes on when it comes to, of course, multi-assets. After what has been this bond market sell-off, that 2-year yield climbing some 34 basis points since the Fed started cutting rates on September 18th. Is this that 1995 Alan Greenspan Fed moment that we're seeing across these bond markets and what they're saying? We'll have more from there. This is Bloomberg. Welcome back to the China Show. Here's a look at the HSI a half hour into the session here today. And it is slow going, I have to tell you. Beyond just that China Resources Beverage IPO and trading debut here today, which is actually doing quite well. We're up about 0.7%. A shares are doing a little bit better. We're seeing upside about a 1% mark here this morning. And we're watching very closely, in particular, not just the IPO market, with CR Beverage, with Tokyo Metric here this morning. That's having both pretty good debuts, but also Apple suppliers, because there's some news, Steve, of Tim Cook being in China right now.
That's right. I mean, a few headlines crossing as Tim Cook, the CEO of Apple, of course, is meeting with the Minister of Industry and Information Technology in Beijing. The headlines so far, Cook and Jin, who is the chairman of MIIT in Beijing, exchange views on Apple's development and also on data management. That is a key issue to keep, whether or not to keep data onshore, of course, in China, with China, implementing its new data security laws. Jin, for his part, says he hopes Apple will continue to expand its presence in China. This at a time when the iPhone 16, particularly the Pro and the Pro Max versions, have done fairly well in China since the launch in September. Sales seeing a 20% spike upwards.
Yeah, it's only been 3 weeks, but at least the numbers so far are looking pretty upbeat, and maybe does show that this new model is getting a bit more traction than what we saw from previous models as well. So certainly that is a sort of a little bit of upbeat forecast there, what's to come. And what does that mean in terms of competition with Huawei, that Mate 60 series, which a lot of analysts still say is doing quite well domestically there as well? Yeah,
that's right. Some of the domestic players obviously have done well. There's also been some rumblings about government restrictions for Apple products because of potential data issue or security issues. But again, so far, so good in the first going weeks for Apple iPhone 16. And now Tim Cook obviously sees the importance of the China market. He is there in Beijing right now. Hopefully we'll have more details coming up. There's a stock photo of Tim Cook.
Yeah, so early signs of maybe this upgrade cycle is actually getting some momentum. We'll see, right? And the rest of markets are doing this. It's a pretty slow-moving market, but really we're still focusing on what's going on in the bond market. That's probably where you're going to see the most volatility. The MOVE index is in the highest levels that we've seen all of this year so far. So we are extending that sell-off that we saw when it comes to treasuries here, albeit, though, it's not as furious as we saw on Monday, where we saw 11 basis points to the upside in the 10-year. So we're still talking about 4.2% handle for that 10-year here right now. That brings us back to the levels that we saw in July. And you're seeing that, right, across the curve in some of these bond markets in Asia. The 40-year yield in the JGB, for example, is at the highest since 2008 right now as well. That gives that bid to the dollar a little bit more, right? You're still continuing to see euro-dollar on a bearish trend here. 107 levels here. Dollar-yen's approaching 152 levels as well. So you got to wonder what's really driving this sort of bond sell-off. We had SocGen's Alain talking just a little bit earlier, saying, look, it has to do a lot with what people are thinking about how the rate outlook's going to look like with the Fed. But he says it's bizarre, right? It's bizarre for the Fed to cut 50 and then pause. And
then pause, right. Well, things have changed a little bit in the last month or so, and he said still he has those conviction bets that he made in September 12th. He says stock up on the yen, even though the yen has reversed directions, obviously, as you're saying, upwards now, or weakening to about 152 almost, even though he said, buy the yen. He says now's the time to buy even more, even though the U.S. rates might not be going lower at the fast rate that we talked about earlier. Let's bring in Fabiana Fedeli, CIO for Equities, Multi-Asset and Sustainability at M&G Investments. Thanks for joining us.
Good morning.
We haven't seen you in Hong Kong for a while. Thanks for coming back.
She said, it's amazing.
It's great to be back.
Yes.
So how do you read what's been happening on the markets right now, in particular with the bond market, especially with the expectations? A lot of people paring back the expectations of more aggressive rate cuts.
Look, it's a matter of looking through the short term to the medium term or staying on the short term. You would expect the trend for rates to be down. This is not only for the Fed, but for all major central banks. But in the short term, we have so many elements that can bring volatility to that. I mean, think about elections coming in. Obviously, that could bring volatility at the long end of the curve because of the concern of fiscal policy. But we also have more data coming out, even between now and the next Fed meeting. We're having PMIs tomorrow. We're having PCE data. So never say never. The consensus is a 25 basis point cut, but whatever happens to the data, also to labor data, that could determine a change.
But you're saying you're keeping exposure at the long end as a bit of an insurance policy as well, in case things really turn south.
We are. We did cut our duration exposure significantly after the big, if you want, price appreciation in bonds towards the end of the summer. We have then cut that exposure. We kept some at the long end of the curve because we feel that that's a good insurance towards, for example, macro decline. But we're very aware that that's a longer-term trade.
It's so rare to see, right? The Fed cuts 50 and then yields pick up so aggressively like we've seen. And some have said it harkens back to 1995 and Alan Greenspan when he, orchestrated this soft landing scenario here. And we actually did see yields rise more than 100 basis points for 12 months after that first cut. Is that how you foresee it in any way? Or we're not feeling like 95 right now?
This is a market where market participants are extrapolating long-term truths from short-term data. It is pretty unprecedented for me. It is probably also due to the fact that more market participants can participate. It's easier. There is more retail investors. But clearly there is a velocity that we haven't seen before. And especially there is a velocity in the fixed income market, which you can see through the MOVE index.
So what would be your advice to investors right now as we go through this periods of volatility and pared back bets on further Fed cutting at the same time with the increased volatility that the U.S. election is going to pose in a couple of weeks?
Look, you have two elements here. The first one is that over the medium term, unless something happens with oil prices, geopolitical issues, but you should have a decline in rates. And on the other hand, if you continue to have strong data, that can really support equities. So right now we're quite balanced in terms of we have a neutral position between equities and fixed income, but we're really playing the underlying components. So where we invest. And so not only, for example, in the U.S. yield curve, look at the UK yield curve. Actually, a lot is not priced into that, and also some of the emerging markets bonds.
Yeah, you're still buying Japan. It was interesting. We had SocGen on that came on and said, look, he still thinks that yen can actually strengthen. They've actually reduced their allocation and exposure to Japanese equities, just given the volatility around the yen. What's the story around Japan for next year?
Look, you either look at it as the overall market, as a passive investor, and so clearly whatever happens to the yen has an impact on the overall market performance, but you can also look at it as we look at it as an active investor. And as an active investor, Japan is right now one of those markets that give you so much upside potential. The whole reform from a shareholder returns, from also an operational leverage standpoint, there's still so much to give for that market.
I want to save China for the next block, right? Because we can talk a lot about China, right? But the yen usually has been in years past a safe haven in times of volatility. It's not really necessarily right now because of other, the gap between the two central banks, obviously. But again, gold has been a safe haven. What's your view on that?
It's so interesting with gold. There is a structural story there. Central banks have started to buy. They continue to buy. Obviously, there's a geopolitical story behind it. The concern of some countries to potentially being held hostage to the SWIFT system of payments, and whether you believe that is right or wrong, that is really what is happening in the world. And I believe that will continue. And obviously then the trade is accelerated from investors who are concerned about geopolitical risk, and it's a little bit of a self-fulfilling story.
It brings me to kind of this whole question about U.S. exceptionalism. As well. I think Goldman had a very interesting take, right? The decade of these big S&P gains is over because we're already seeing a high starting point, elevated Treasury yields. Do you see that as, they're thinking returns could be in single digits in the U.S. market now, or do you think that it's more of a benign outlook that you have?
Well, if you look at a U.S. market, would you define U.S. market? Because there are really two markets. There are 7 stocks, and then there are 493 stocks. And actually, what you have seen is that last year, the 7 stocks were having better results than the 493. Now it's the contrary, actually. Yeah. And you see how the rest of the market is actually really improving. So I think the U.S. market does have a lot to give. Again, it's more of an active investor opportunity, in my opinion, right now, than a passive investor opportunity.
All right, Fabiana, you're staying with us. Fabiana Fedeli there from M&G Investments. We got plenty more ahead. This is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
All right, HSI session highs here right now. We're actually seeing a bit more momentum around this market. We're up about 1.5% here today. CSI 300 also actually reversing those earlier losses, and we are in positive territory. Japan's doing another thing, but certainly we'll continue to watch how this market does in mainland China after things have, I guess you could say, paused a bit, Steve. Yeah. We're back with Fabiana Fedeli, CIO for Equities, Multi-Asset and Sustainability at M&G Investments. You've been traveling all around the world. We've seen this policy, almost 180 sort of shift from policymakers in China, this massive rally. How are foreign investors, your clients, responding to that so far?
I think at the moment they are confused. They see what is happening. They realize that many of them have been out of the market. and they're wondering what they should do. There is an understanding that clearly the government is extremely focused to get this market back on track. But will it succeed? That's the question mark that everybody has.
We saw a bit of a rotation as China has been in the slumps. We've seen a rotation a bit into Japan. We've seen a rotation into India. Those seem to be backpedaling a little bit. The fundamental concerns in China are still there. Just authorities are talking up. Are they? Is it a good story to buy into, given the valuations are so depressed, or are you still concerned by the risks?
So we have actually always been positive on China as a market where to find opportunities from an equity standpoint, not as an overall market, but actually finding some really interesting investment opportunities. I mean, a lot of the companies are returning cash to the shareholders. It's either buybacks, so it's higher dividend. They're very high quality companies generating lots of cash flow. And they're growing. So we like that. There are also a lot of companies here who have learned from the Trump first presidency, if there will be a second, and they have kind of disentangled themselves from having a too extensive exposure to the U.S. So there are a lot of opportunities here at the moment. But again, we have to be careful with the animal spirits because they tend to bring the market up, and then just as fast as we've seen it, they can bring it down.
And we've been talking about how there's been a lot of EMX China funds that continue to be growing and sprouting, despite all this policies that we've heard so far as well. So is it unlikely then that China does regain that status of being a must-have in EM portfolios?
It's too early to tell because, you know, we've only had stimulus for, a few weeks. So
now they already want more. What have you given me lately, right?
So those EMX China strategies have already started to appear, and it will take some time before any U-turn. But clearly this kind of changes the balances a little bit.
Yeah.
What else are you looking at? What haven't we asked you that really we should be looking on the radar for?
What in China in particular or across?
I think everyone's seeking alpha where we can find it.
We continue to like Asia. There is a lot of opportunity. Everyone is looking at China, but how about the rest of Asia? Think about Southeast Asia. And think also about North Asia with obviously the technology upside that we see there. So there have been some ups and downs, but innovation is incredibly strong, and this is the cradle of that innovation.
So you think that AI trade still lives on for next year?
But to me, AI will continue to be part of our lives for years to come. You've seen it also in the results. Everything around AI remains strong. There are other areas that need to stabilize. But, it's always a matter of expectations, right? Expectations can rise very, very fast in the short term, but I think long term, it's an incredibly strong story.
How much of a risk is, and I'm sorry to bring it back to the U.S. presidential election, but we saw Christine Lagarde, the ECB president's face kind of go, ugh, when she started talking about politics. But politics have become such a huge part of the risk factors for not only the U.S. market, but around the world. How much of an impact is the potential return of Donald Trump to the White House versus the continuity candidate of Kamala Harris on the markets?
So there are two elements there. There's always a lot of volatility around elections, and then eventually markets will find their way based on the underlying fundamentals, where it's earnings for companies, the macro data, or obviously the rates coming down. So from that point of view, I think there will be that volatility that we have to really look through, and if anything, consider an opportunity for some interesting investments. But obviously there are areas that we need to be concerned of on the tax side, on the fiscal policy side. A lot of that will play out in the longer term.
Yeah. How do you express that? Is that steepeners on the curve? Is that FX volatility? I mean, how do you actually strategize right now? What are some of the gaming scenarios that you're mapping out?
Well, first and foremost, we have learned that you don't want to trade around election time unless it is because you think some stock have gone too up on non-fundamentals or to have crashed because of no other reason.
How about the euro? How about the ECB. We know there's going to be probably further cuts coming there. We saw the euro down to the lowest since early August amid bets that the ECB, I mentioned Christine Lagarde, that the ECB will continue rate cuts or lowering the rates there. What's your outlook? We haven't even talked about Europe.
Europe, from a macroeconomic standpoint, is weak and is also very divided. You have a south that is actually stronger, with Spain, for example. Italy actually not doing too bad or as bad as expected. But the north, the big countries, Germany and France, still very weak. Again, equity markets don't necessarily reflect what happens in the macro environment. That's a great thing, but bond markets is different. And so we've seen the spread, for example, of the Bund to the treasuries continue to widen.
Fabiana, thanks so much. Please don't wait another 3 or 4 years to come back and visit us here in Hong Kong. Fabiana Fedeli, CIO for Equities, Multi-Asset and Sustainability at M&G Investments. Of course, plenty more ahead. This is The China Show, and this is Bloomberg. You're watching Bloomberg, and this is, of course, The China Show. Thailand's central bank chief says economies across Asia are continuing to reel from the knock-on effects of China's slowdown. Thailand's manufacturing sector, in particular, is struggling to cope with cheap imports from Beijing. But Kun Setoput told us exclusively he doesn't think tariffs are the solution.
China is impacting, I think, Thailand and other economies in the region quite significantly. There's a direct impact in terms of a slowdown in China. It affects our exports to China, affects the tourists that come to Thailand and how much they spend. But we're seeing increasingly indirect effects as well. We're seeing that with the slowdown in China, the stuff that they produce they can't sell, so they export that out to countries around the region, including Thailand. So we've seen imports from China increase very rapidly. We've seen our trade deficit with China increase significantly as well. And we've seen our exports to third markets been affected by, again, these increased Chinese goods in other countries in key export sectors for us, like petrochemicals, automotive, and also in terms of imports coming into Thailand, construction materials.
Is there anything policymakers should be doing, you think? I mean, at what point should policymakers consider perhaps imposing tariffs?
I think the tariff decision is a big and one fraught with a lot of implications. I think already there is sufficient turmoil on the trade front. The last thing I think that the world needs, given all the uncertainty and whatnot that's happening, is things that would exacerbate the trade conflicts. Which is a situation that doesn't benefit anyone if we see a sharp slowdown in trade. So I think those kinds of decisions need to be taken very, very carefully.
The baht has seen a turnaround, one of the best performers in Asia this year. You've said before there's no specific target for the currency. Are you concerned, though, that in the lead up to the U.S. election, you may see wild swings in the currency?
Yeah, I mean, the volatility of the currency has been very high, the baht. Typically, previously, the volatility of the baht was closer to the other ASEAN comparators, but recently it's edged up, and now the volatility of the baht is getting closer to that of, say, the more volatile currencies in the region, like the Korean won or the Japanese yen. So, a lot of that's driven by what's happening in the advanced economies, but coupled with Thai-specific factors. One thing is, again, Thai economy is seen as being very linked and very close to what happens with China. So when there's news about China, that affects the currency's volatility. That's been an issue for us because, again, we're a very open economy, exports and tourism, big chunk of our GDP. And a lot of those firms in those two sectors are SMEs. Exporters, for example, are a lot of SMEs there, and they don't hedge as much as we would like them to do. And so they get hit and get affected very much by the volatility of the currency. So it is a concern.
The Bank of Thailand Governor speaking to us for Insight with Haslinda Ahmed. And, of course, you can join Has for that interview in full in the next hour. Now to some other big corporate stories that we're following for you today. Starbucks shares fell in extended trading after the company pulled its guidance for 2025. The coffee chain reported its steepest quarterly sales drop in 4 years, with weakness especially evident in the U.S. and China. Starbucks says withdrawing guidance for the current fiscal year will give new CEO Brian Moynihan an opportunity to solidify a turnaround plan. McDonald's shares fell in late trade as well after the U.S. Centers for Disease Control and Prevention said a severe E. coli outbreak was tied to the fast food chain's Quarter Pounder burgers. At least one person was killed and dozens more fell sick, mainly in the U.S. states of Colorado and Nebraska. McDonald's has identified onions as being the likely source of the outbreak and removed the Quarter Pounder from its restaurants.
The decision to do this is not one we take lightly, and it was made in close consultation with the CDC. It's important to note that the majority of states and the majority of menu items are not affected. Other beef products at McDonald's, including the cheeseburger, hamburger, Big Mac, McDouble, and the double cheeseburger, are not impacted.
All right, we're taking a look at some movers here in Hong Kong. Chow Tai Fook, that's certainly one to watch here. Seeing shares gain close to about 9% this morning. Morgan Stanley coming out with an interesting call saying the retailer sales does show signs of recovery amid the improving demand picture that they're seeing in October. So October's demand trend has been encouraging with narrowing same-store sales growth decline. So a little bit more optimism there. Pop Mart, that's the one to watch. Third quarter sales fueling some price target hikes as well for that company. So the stock is surging some 17%. We're also watching Asahi shares. So the shares are also rising after announcing some price hikes. And Korea Electric Power Core, that's the one to watch there as well, jumping the most in 8 months on that power rate hike as well. And then, of course, we're watching very closely how these trading debuts in Hong Kong. China Resources Beverage and Tokyo Metro Fair will bring you the latest coming up after this break. This is Bloomberg. .29 a.m. in Tokyo. Japanese markets are heading to that lunch break here in just a minute. And you're taking a look at when it comes to price action in Tokyo. Not doing a whole lot. It's pretty quiet out there. It's just some slight downside when it comes to the Nikkei 225, although yields are picking up across the region here, just following the moves that we've been seeing in Treasury markets in the last 2 sessions or so. Steve.
Yeah, that's right. And, of course, Tokyo Metro is a big one that we were watching, obviously, today. For more on Tokyo Metro's listing, let's go to our Japan stocks reporter, Alice French, in Tokyo. So, Alice, tell us about this debut. Obviously, it's well received, up some 43% right now. Is this a surprise? I mean, probably not, given that demand for this IPO was pretty strong.
Yeah, so look, there's been a lot of excitement surrounding this IPO, not least because the Metro is a household name across Japan. We're seeing the shares trade just above 1,700 yen at the moment, which is compared to 1,200 yen for the IPO price. At one point this morning, the share price was up 47% higher than the IPO price, which is pretty big. The average is 34% across IPOs in Japan this year. So it's safe to say there's a lot of excitement, there's a lot of hype around these shares. I think driving that demand, there are several factors. One is the high dividend yield that these shares promise. Based on the IPO price, investors can get 3.3% on their dividend yield, which is pretty good. That compares to around 2% across an average for land transport stocks here in Japan. Also, obviously, the timing of this IPO is pretty significant. It comes ahead of the lower house election here at the weekend, where there's been some anxiety in the markets over what's going to happen. And so definitely this is seen as a stable and safe bet, I think, for a lot of investors, as well as the fact there's just a lot of affection for the Metro here in Japan and also outside Japan. It's known for its cleanliness, its orderliness, and its reliability, which are not necessarily characteristics applied to all metros across the world. So yeah, I think definitely the general consumer excitement is driving this.
Yes, I mean, I always take the subway more than any other sort of transportation when I go to Japan. But yeah, you talk about how well known the metro is, how well loved this public service is. What's the mood then, Alice, like among metro users regarding this IPO?
Yeah, so the sense that I've been getting on the ground is generally a positive one. A lot of users are very excited by the prospect of being able to own a slice of such an iconic company. And people are generally thinking that this will be a good thing, and that having a more diverse investor base will be good for the company. There are also some concerns, though. I was actually speaking to some of Tokyo's train spotting community last week, and they were raising some worries that, obviously once the metro has to start answering to shareholders and potentially cutting costs and increasing shareholder returns, they may see a slip in service standards. One thing that particularly came up was the standard of the toilets. So the metro is known for having clean working toilets in every station, and people are a bit worried that could be one of the services that would be the first to go if cost cuts did happen. Hopefully that won't be the case.
Well, Alice, tell us about some of these shareholder perks the Metro is offering. What are they, first of all, and why did they feel, if the demand was already so high, why did they feel that they needed to introduce these perks, like free rides and the like?
Yeah, exactly. So the Metro is offering a range of perks to any investors that buy at least 200 shares. One of them, like you say, is free train tickets, which obviously appeals to anyone that's using this service to commute to work every day. You can also get free toppings on your noodles at the Metro's chain of soba restaurants across stations in the city, and other things like free entry to the Metro's museum here. So I think these perks are really trying to tap into the retail investor base, right? So retail investors are becoming a growing force in Japan's market as we've seen more corporate governance reforms come into play. Retail investors are seen as a very loyal and stable long-term source of income, particularly with this new bolstered NISA account that we have here. And the income from domestic households has been flowing into stocks a lot this year. So I think the Metro, along with many other major Japanese companies, have really been trying to get those retail investors interested. And of course, perks like this are great for attracting those potential first-time buyers.
You got me. I mean, free toppings, dividends, some dashi put in there as well. Alice French, thank you. Our Japan stocks reporter joining us out of Tokyo on that Tokyo Metro debut here. Another debut happening here in Hong Kong is China Resources Beverage. We're still checking that. Now that we're seeing a little bit more of that price action, there you go. We're just about an hour into that debut, and yes, we're still seeing those surge in shares, about 10.5% or so.
And Yvonne, we're also watching HSBC, of course, here in Hong Kong, known as the bank, with its management overhaul under new CEO Georges Ederle, leaving staff and investors alike with plenty of questions. Let's bring in Bloomberg Intelligence senior banking sector analyst Francis Chan. So investors obviously focusing on some of the cost savings, I guess, on this revamp globally. What's standing out to you?
Well, I think the market knows so far. We don't have the details, and we may not have the details next week in the third quarter results call either. We're looking forward to more in February, maybe the full-year results call. And for what Bloomberg Intelligence is thinking, the merger between commercial banking and the global banking division itself could generate about 2% synergy per year. Bring the total savings to more than $500 million US dollars in the coming 2 years, like the 2-year total more than $500 million for 2025 and 2026. It's pretty critical because now HSBC is facing the low rate environment because of the Fed cuts. Revenue can come down 1% per year, but consensus is still expecting the group expenses to grow 3% a year. In order to keep the cost efficiency ratio below or at least closer to 50% what they achieved in 2023, that kind of savings will be critical.
We're also going to see a bigger separation among HSBC's new business units. What is that going to tell you? How might this impact their core competencies?
Well, I would reckon HSBC has been the really international local bank as once they have advertised itself. It served the local community really well with the international network. With this kind of new setup, customers, bank customers, either corporate or personal customers alike, they may wonder if there will be any boundaries between those four units. Can HSBC still serve me on an international level as ruthlessly as before? Now Hong Kong can directly report to the board like those newly set division, like the International Wealth Management Division. So that would be some of the concerns, maybe, at least from the customer point of view.
How much of this restructuring is a product of whether it's activist investors or other shareholders' demands for changes at the bank? I mean, I've been covering HSBC for a number of years. In the last 5 or 6 years, it just seems like it's always in a cost-cutting mode and this and that, and now this big restructuring. How much of it is tied to what shareholders have been demanding?
Well, the biggest cost-saving efforts have been materialized, at the very least, through the past 5-6 years, with the cost efficiency ratio already down to close to 50%, versus like 70% plus many years ago. Now, we are talking about whether that's like a response to some shareholders' requests, and we do see bigger divisions of business and maybe management power. And it may make the separate divisions easier to be carved out or spun off if the business have been, setting up clear boundaries.
Francis Chan, thank you. Our Bloomberg Intelligence senior banking sector analyst on the latest when it comes to HSBC. We got plenty more ahead. This is Bloomberg. All right, we're checking bond markets here this morning, and we continue to see that sell-off continuing, but not as, I guess, scary as just the previous session here. But there you go. U.S. 10-year yields are still punching above that 4.2% level. That's the highest we've seen since July. But also, you're seeing that felt across Asia, really. With Australia, bonds up some 2 basis points. Even the Chinese 10-year yield is slightly higher here this morning, Steve.
Well, one other story that we are covering and kind of trying to find some more information about is Apple CEO Tim Cook. He's back in China, in Beijing, meeting with government officials earlier Wednesday. This is sales of the new iPhone. The Pro Max and 16 from the iPhone has beat expectations for the mainland market, up some 20%. Let's get more with our tech reporter, Annabelle Drulers. Annabelle, what have you found out? What is this meeting with MIIT in Beijing all about?
Well, it's pretty interesting timing. And as you said, we've had those sales of the iPhone 16 and they've been doing better than actually had been expected for the Chinese market. What is interesting around the timing of this, because it is actually Tim Cook's second trip to mainland China this year, but what's interesting in terms of the timing is the expectations perhaps that we could see some sort of developments around AI and the use of Apple Intelligence in these smartphones. Because, of course, China has not allowed the application or the use of outside AI tools. So Apple is likely to turn to local suppliers here or local players in the AI space to integrate these sorts of applications into its latest technology. Baidu, for instance, has been one of the names that's been touted. The meeting today, though, it was really perhaps centered on that. I mean, the sort of wording that we've got from Chinese officials is a lot more vague than that. But certainly they did exchange, at least we know, the Ministry of Industry and Information Technology and also Apple CEO Tim Cook views on data management, cloud services. Again, that could be a nod to the AI applications. Also exchanged views on Apple's development in China. And this area is quite interesting, too, given that the major assembler of iPhone products, that's Foxconn or Honhai, has moved the most advanced or the latest high-end smartphones, the iPhone Max and Pro, to India. It's obviously a market that China also wants to retain moving forward.
We also had that big development in the tech space earlier, Belle, about ARM canceling this license to Qualcomm. Seems like this feud is escalating now.
Absolutely, yeah. I think it's important to sort of understand the context of how these companies operate. So essentially, ARM licenses its technology for chip design to many players across the market. Qualcomm is one of those, and they do have a long-standing partnership. What has happened is that it's really an escalation, as you say. Back in 2021, ARM actually sued Qualcomm. It was concerned around how that licensing was being used or applied. Qualcomm countersued, and now we've got the latest on that. So today, we just had a document that was seen by Bloomberg saying that ARM will cancel the license that allows Qualcomm to use its IP to design chips. And they've given them a 60-day notice of cancellation of their so-called architecture license agreement. So certainly, as we say, a very serious escalation that could actually have quite serious ramifications as well.
Well, what are the broader ramifications of the smartphone industry as a whole? I mean, these Qualcomm chips go into a lot of smartphones all around the world.
Absolutely, yeah, and that's really the key concern here because, of course, there is sort of a dispute resolution window here. They've got about 8 weeks to try and figure this out. If nothing is figured out, yes, that sort of becomes, I guess, what's the worst case scenario in this. Qualcomm, as you say, it sells hundreds of millions of processors annually. That is the technology that's used in the majority of Android smartphones. And if that cancellation takes effect, then essentially it could have to stop selling the products that account for a lot of their revenue. You're talking about revenue of nearly $40 billion per year. They could also face claims for massive damages. Certainly something to track very closely.
Well, thank you, Annabelle Jewellers there, our Asia Tech reporter joining us there with the latest with all things tech, Apple and ARM today. Plenty more ahead. This is Bloomberg.
Season is here.
I think that this earnings season is going to be so important.
Bloomberg is first to break the numbers.
NVIDIA earnings now crossing the wire.
Bank of America, the retailer Five Below.
There is something for everybody.
With the smartest insights.
Weaker inflation is not great for earnings.
I think the consumer's a bit more resilient.
You've had earnings recessions flow through growth and then cyclicals and defensives.
Earnings cycle continues on Wall Street.
Continuing coverage on Bloomberg. Context changes everything.
Here's what's trending in China. Look at what's making headlines in national newspapers this morning and the financial press sounding upbeat about the impact of the PBOC's measures to boost markets. The Securities Daily reports that some 500 companies had issued share buyback plans as of Tuesday after the central bank launched a program to fund them. Analysts tell the paper the PBOC's relending facility is boosting market confidence and long-term investment. And Shanghai Securities News says some securities firms have completed their first transactions using the PBOC's swap facility. They include CICC, which reportedly pledged to increase its stock holdings. The swap facility allows institutional investors to access funds from the central bank to buy shares.
Meanwhile, President Xi Jinping's meeting with Vladimir Putin on the sidelines of the BRICS summit in Russia is topping today's state media coverage. Papers are portraying China-Russia ties as a good example for relations between major countries. A Global Times editorial also says the relationship promotes the interests of nations in the so-called Global South and that BRICS is not an anti-Western alliance.
Okay, that's the geopolitical side of things. I think it was interesting, too, Steve, that they talked about these different tools that have been launched to stabilize the market, whether it's the relending facility to help companies buy back shares, whether it's the swap facility. There's an interesting also report out about this think tank that is talking how much money needs to be used to start up a stabilization fund for markets to maybe further add some more stability.
Yeah,
there.
It was one newspaper, the Chinese media outlet, the paper, citing analysts, I believe, at the Chinese Academy of Social Sciences, which is CAS. It is affiliated with the State Council, the Chinese cabinet. And essentially, they are quite influential. And they're talking about China should issue about 2 trillion yuan, $281 billion of special government bonds to create this market stabilization fund. As we've all seen, the market soared up following that raft of stimulus, it's kind of come back, waiting for perhaps more, catalysts to keep this momentum going. So they've talked about a stabilization fund, but there's no details yet.
Yeah, just when things are losing a bit of steam, maybe this is what else is needed as well. And I think the more you talk to commentaries about when we're going to see that fiscal stimulus pull through, it seems like that date keeps get pushed back, right? Yes, we're looking at this MPC Standing Committee meeting that's happening, but you also have to look at the election, the U.S. election, and maybe we can wait until we hear who becomes president there first before China acts again.
Well, I think the key on fiscal stimulus, whatever the number is, that's obviously an important part of it, but where is that going to be targeted at? It's going to be targeted at the provincial level, it's going to be targeted at consumer. So far, it hasn't necessarily, because Xi Jinping, by all accounts, is against welfarism and handing out money of any form in that sense. Is it going to go towards stabilizing the property market and putting a floor there? So again, I think they are trying to wait until, yes, the Standing Committee of the National People's Congress, which would have to basically legalize any kind of law change, especially any extra budget or bond quotas and the things like that. So yes, we're waiting for that, but maybe we're waiting for after the election as well.
Yeah. Back to geopolitics now. We're talking about South America increasingly becoming a critical front in the competition between U.S. and China. U.S. Deputy National Security Advisor Jonathan Feiner argues that the impression of Washington's waning global influence has been reversed, and this is apparent in the region. He speaks with Bloomberg's editor-in-chief John Micklethwait at the Bloomberg New Economy at B20 in Sao Paulo.
This is a region that's going to make its own decisions, its own economic decisions, its own decisions about trading partnerships, about security partnerships. And the United States very much respects the sovereignty of the countries in the region and their ability to make their own decisions about what's best for their future. We've also been quite clear that we are engaged in a global competition with China, and that competition is at the core of the U.S.-China relationship, and that it's not limited to the Indo-Pacific, but that it's playing out in other regions of the world, including here in our own hemisphere. There was a narrative that I think that was prevailing when this administration took office, that the United States was sort of on the verge of being surpassed by China as an economic power, that United States influence was waning in the world, that China's influence was on the rise. I think those predictions have very much been reversed over the course of the last few years, in large part because of the partnerships the United States has built with key allies and key partners, including very much in our own hemisphere, and because of the investments that we have made in our own sources of strength here in the United States. And so what we're seeing play out now in this region, in Africa, in the Indo-Pacific, and in Europe, we believe, very much is demonstrating the value proposition of working alongside the United States, in the construction of high standard critical infrastructure, in pursuing clean energy policies, in developing advanced technologies. And we feel very good about our position in the region and about the value proposition we offer countries as they make these decisions about the partnerships they will choose.
Do you think there are things, though, that you could do in terms of amassing private capital and those kind of options that America could begin to fight back against this kind of development economics that China is practicing?
Well, one of the huge advantages the United States has, a force multiplier for the United States, and again, goes to this question of the value proposition of working with the United States, is our dynamic and robust private sector, unparalleled anywhere in the world. The United States doesn't have a sovereign wealth fund. We don't have state-owned enterprises that we can direct in terms of their capital flows or investment decisions. But what we can do is incentivize and work with our private sector to invest in areas of strategic significance and importance to us. And we see a demand signal for that investment all around the world, including very much here in our own hemisphere, and believe that there has been a lot of progress in that regard over the course of the past few years, and it's something we very much want to incentivize. It's something unique that the United States can bring to bear in terms of the scale and the scope and the sort of cutting-edge nature of what our private sector offers.
That was the U.S. Deputy National Security Advisor Jonathan Feiner speaking with our editor-in-chief, John Micklethwait. Take a look when it comes to markets and movers. We're focusing on earnings here, just kind of what has come out so far. So the telcos have reported, and the likes of China Unicom has been one. So we are seeing shares rise just slightly there. But Citi was saying basically so far the results for the third quarter have been in line. So they're saying that they expect a consensus upward revision of those full year results, though. So that's why you're seeing Unicom shares are up some 3% as well. We got some other earnings to tell you about. Hong Kong Exchange certainly is going to be a key one, just given all these inflows that have been heading into Chinese markets. You talk about IPO pipeline, the likes. A lot of questions for Bonnie Chan, the CEO, later on this evening as well. But Hong Kong Exchange is rising there. But we're also expecting Goertech, New Oriental Education, China Coal, all to report later on today.
But generally speaking, we're seeing very positive inflows into Hong Kong. The Hang Seng Index and the Hang Seng Tech Index rising about 2%. There's a lot of interesting catalysts in the Hong Kong market right now. You have this IPO, China Resources Beverage, climbing more than 14%, upwards of 16% at one time. You have another big IPO coming tomorrow, a robotics AI firm. And there's this stock stabilization talk in Beijing. So interesting times. We'll be back doing the same thing with Yvonne tomorrow. This is Bloomberg.